In this video, I'm going to share with you some price action secrets for when the market approaches key levels on the US 30 and on NASDAQ. I always think that it's important not to overly fixate on a direction before the markets open, because often there are things going on behind the scenes that we don't actually find out about until later. And therefore, it's really important to be able to read the price action very clearly to understand what might be going on behind the scenes. So, for example, I will always do a pre-market directional bias checklist based on the information that we have been given. So these are things like pre-planned news releases, price action on the day chart, daily momentum, earnings reports. All of that information we're given before the markets open. So we can do an analysis of that and we can come up with a directional bias based on that information. However, there are always things going on behind the scenes. There are meetings that are going on. There are announcements which are yet to be made. And we don't know about these things yet. So every time you come into the trading session, you obviously have a directional bias based on the information that you are given. But you also need to be aware that there are things going on which you're not told about, and being able to analyze the price action as it approaches key levels will help you to make more informed decisions. If you're excited to learn, make sure you give the thumbs up button a little hit before we get started. And if you want to see a future video going on to how to draw on good key levels for the US indices, then make sure to let us know in the comments below.
One of the first things to be aware of, which I think is really interesting, is that you actually often see the move in the market before you see it in the news. So what I used to think was, because I had all of the news pop-ups on my phone and I was seeing all the news updates as they were coming in, that I would be able to use that information to make buying and selling decisions. But what I later discovered was that actually you see the move in the market before you see it in the news. So often by the time you get that news notification, the market has already made its move based on that, which is why it's really important to be able to understand the price action, because you'll be able to tell when news is coming out based on what you're seeing on the charts. So an example of this was when Donald Trump was announcing his tariffs. I noticed that the market was not behaving as I was expecting it to on the key levels. It was crashing through them. This told me that there was some news that was going to be coming out that I didn't know about, and it helped me to make the decision to actually sit out for the rest of the day. Because I didn't understand what was going on, I didn't understand how to trade it. It would have been different if perhaps Donald Trump had announced that he may be imposing tariffs on a certain day, and therefore I might be expecting to see something unexpected. But because I had no idea at that point that this was going to be announced, I didn't know how to respond to it. So it's always really important to do as many checks as you can before the market's open, so you know exactly what is going on and what information we do have, but then also to understand how to read the market so that you can see what else may be coming up that we didn't know about yet. So I could talk about price action at key levels forever, but for the sake of keeping this video at a reasonable length, I'm going to be focusing on three things which I will look for when the market approaches key levels. And that is whether the market bounces off the key level, that's whether it has a reversal, whether it breaks the key level, or whether it has a pullback at the key level. So it's really important to remember that we're not making decisions about what direction we're going to be trading in. We're looking at all the information that we're given, and then we're reacting according to that. So having the right key levels is really important, because then we know when we are looking for activity to happen. And that means that we can then react accordingly when the market approaches those key levels. So in the example that I gave you, when Donald Trump was announcing the tariffs, what I saw happening at the key levels was that the market was breaking through them with long-bodied bearish candles, rather than bouncing off them as I would have expected. Now, bodies and wicks are really important when you are analysing the price action at key levels. Bodies show a lot of certainty, whereas wicks show price rejection and uncertainty. So you're always looking at, did the body cross the level or did it wick the level? So we're going to use a little example that we have up here to show you a few things that can happen at key levels. We've got 3 key levels on the chart. These are actually just example levels, so please don't draw them on. This is just for me to demonstrate price action for you. Can you see on this one, we have a level here and the market shot right through it with a long body candle. So the body of the candle broke up above the key level. So that shows quite a lot of certainty for a bullish move. This point here, you get the wick bouncing off that key level there. That shows that it's rejecting that price point, and this becomes a key level. When the market comes back down, it uses this point to bounce off here. But can you see how it would have been premature to enter into a sell position at any of these points, because the market didn't break through this key level with a long-bodied bearish candle. It bounced off it and it wicked it. So the wick actually shows price rejection and uncertainty rather than a move in that direction. When you see wicks at key levels rather than bodies, you're more likely to look for a reversal or a pullback. So in this case, you can see that the market used this point to then make a move up. I'm just going to show you another example. We're going to go to the 5-minute chart now, and we're just going to go a little bit further back. Can you see how we have a few key levels in a row here? So when you have a lot of key levels in a row, sometimes this can make it particularly difficult to enter in. So it can make your chart look messy, and that messiness is a little bit of a warning. If there are too many key levels all clustered together in a row, what you can get is a very choppy market, which is just bouncing off the different key levels. So it might be going in a certain direction, but it might be going there almost too slowly, and it could be too difficult to get a good entry with a good risk to reward, because the pullbacks that might be happening off those key levels could actually end up being larger than your maximum stop loss. So even if the market is making a move in a direction quite clearly, say it's moving upwards, very clearly it's moving up, it still may be impossible to get an entry. And often what I'll be looking for is too many key levels clustered together. This is a sign that it might be too difficult to get an entry, even if the market is clearly moving in a certain direction. Another thing to be aware of is the price action that you see happening when the market is bouncing off lots of key levels is very similar to the price action that you will see if there is a meeting going on, either that you know about or that you don't know about. And this is really important because you can use this information. If there's a meeting going on and we know about it in the news, I will have already included this in my pre-market check, because I'm always doing a Google search for Donald Trump and for the Fed, as these are two searches which make a really big difference to the US indices. So it's always worth knowing what's going on. If there's a meeting going on, then often we will see this sort of price action, this sort of move in a certain direction with these big candles, which are too difficult actually to get into a position, even though the market is still moving in a direction. That's what the market tends to look like if there's a meeting going on. Obviously, if we know that the meeting's going on, we can be aware that we want to wait for this sort of price action to stop and be more decisive. But if we don't know that there's a meeting going on, we can often tell that there might be one because it might still be doing this. So that's really useful. If there's a meeting going on that we don't know about, then we will want to be able to read the price action so that we are aware that we want to sit out until we see any conclusion from that meeting. So if you start to see the market moving in a direction, but moving with different colored candles every other candle, and if the pullback candles are larger than your maximum stop loss, then that's a really good sign that you don't want to get involved. And often there will be a nice move a little bit later when the meeting has finished, but we don't necessarily know what time that is going to be at.
So now you understand a few of my favorite key level price action trading secrets for the US 30 and for NASDAQ. As always, if any of it particularly resonated with you and you'd like to try to incorporate it into your new trading plan or your trading strategy, then head over to the Traders Gym on Think Trader. It's a simulator where you can test out any theories that you have or any new additions to your strategy whilst using virtual money. And remember to let us know in the comments below if you want to see a future video on drawing on key levels for the US indices.